Good morning. This, in my experience, is usually one of the most confusing topics for students to study because it involves things that are kind of abstract. In other words, it involves businesses who have to pay taxes, and it doesn't involve most of us because the majority of us don't own a business. We're the ones that work for a business. So I'd like to quickly kind of review some of the things that we've talked about. Let's get started. So, what do we know? Well, right now we know what employees, you and I, have to pay as workers for employers. The four main taxes that get deducted out of our personal paychecks: state income tax, which for us is Illinois, 5%, federal income tax, and Social Security and Medicare tax. Now together, Social Security and Medicare are known as what's called FICA taxes. That stands for Federal Insurance Contribution Act, which was passed when President Roosevelt was in office back in the 1930s. Social Security and Medicare known as FICA. So that's the four main deductions that involuntarily have to get taken out of our paychecks. What else do we know? Well, we know what employers pay, the businesses that hire us to work for them. There's also four taxes that they involuntarily have to pay out of their own personal pocket on behalf of every single worker they employ. Social Security, which also has a cap just like it does for you and I. Medicare, no cap. FUTA, Federal Unemployment Tax Act, which has a cap of $7,000, and SUTA, State Unemployment Tax Act, which for Illinois has a cap of $12,250. And again, I won't require you to memorize these figures as they often change. So these are the four things, again, that employers, the businesses that hire workers, have to pay out of their own pocket just because they hire us. Now together, FUTA and SUTA are known as unemployment taxes. So we have Social Security and Medicare known as FICA taxes. FUTA and SUTA together are known as the unemployment taxes. Alright, I'd like to run through really quickly again the true cost of an actual worker. So, here's a fictitious line for Mallory. Let's say Mallory works for Mr. P's Pizza as my head chef, and I pay her $1,000 a week. That's not bad. That's $48,000 a year. Good job, Mallory. Now, let's take a look first at FUTA tax. Okay? Since Mallory's gross pay is $1,000, I multiply that by the FUTA tax rate, which is 0.8%. Since 0.8 is less than 1, when I put it in a calculator, it looks like 0.008. So I have to pay an $8 FUTA tax on behalf of Mallory. Let's take a look at SUTA. Again, I take my gross pay, which is $1,000, and I multiply it by the SUTA tax rate. Now this changes depending on the state you live in and on the industry that you work in. 5.4 is the industry average, so that's why I use that figure here. 5.4 is less than 10, so this time I only put 1 0 in front of it when punching it in the calculator. So here I have to pay $54 out of my personal pocket on behalf of Mallory. That way, if Mallory or any other worker I employ gets laid off, I now have money set aside in a trust fund that the government will draw from when I lay off workers. Social Security. Take the gross pay multiplied by the Social Security tax rate, and I get $42. Medicare. Take gross pay multiplied by the Medicare tax rate, and I have to pay $14.50. And then we also learn that on average throughout the whole entire country, industries pay an extra 30% of gross pay for things that are called fringe benefits. Insurance, daycare, housing allowance, car allowance, cell phone, dry cleaning, lunch, health memberships. All that stuff adds up to an average of 30% per company. So that's an extra $300 I have to pay. So bottom line, Mallory costs my company, Mr. P's Pizza, a lot of money. Her paycheck was only $1,000. But by the time I pay all four involuntary payroll taxes, FUTA, SUTA, Social Security, and Medicare, plus add in the extra 30%, Mallory's actually costing me almost $1,500. So she better be darn good at what she does. Okay, really quickly, FUTA versus SUTA. John makes $13,000 a year. We know that the FUTA tax cap is $7,000. In other words, the federal government says any worker that makes over $7,000, we will no longer charge their company FUTA tax. Therefore, although he makes $13,000, his company is only going to pay the FUTA tax rate on $7,000. Let's take a look at another example. Scott makes $100,000. Now, although Scott makes way more money than John, the company is going to pay the same exact amount of FUTA tax for both workers because both workers are capped at $7,000. Now, Leslie only makes $6,000. Since $6,000 falls below the cap of $7,000, this company is going to take the FUTA tax on all $6,000 that Leslie makes. Okay, SUTA. Again, John makes $13,000. The state of Illinois tax cap for SUTA is $12,250. So since he makes over the cap, the government in Illinois is only going to charge this business on the first $12,250 that he makes times the SUTA tax rate. Same thing for Scott. Although he makes way more money than John, the government in Illinois is only going to charge this business on the first $12,250 that Scott makes. And then on Leslie, it's going to be the full $6,000 because $6,000 falls beneath the cap. Okay? The government puts these caps in place because if they didn't have these caps, businesses would be less likely to hire workers. If the cap was not in place, this business would have to pay FUTA and SUTA taxes on the full amount that Scott makes, which is $100,000. That would be a significant amount of money. So that business probably wouldn't hire Scott. That's why they put the caps there, is to motivate businesses more so to hire more workers. All right, last slide. So what do we need to learn left related to this chapter on payroll? We need to learn all the different journal entries now that accountants must make when dealing with payroll. All right, we've taken a break from journal entries for a while. So this is going to be a little bit rusty for some of us, but I promise I'll get it back in no time. So some examples of journal entries that accountants have to make when processing payroll are: 1, when you pay workers. What are you going to debit? What are you going to credit? When you pay the taxes that you deduct on behalf of the workers. What are you going to debit? What are you going to credit? How about when you pay the taxes that you have to pay as your responsibility as an employer on behalf of your employees? What are you going to debit? What are you going to credit? So that's what we're leading up towards right now. Let me really quickly again go to our BLS.gov website, and let's again take a look at the unemployment rate. Now, if I look at the 10-year trend here, this is a graph that shows the unemployment rate over the last 10 years. You can see it was significantly lower in the turn of the century, and then during the recession it boomed, and we've been hovering right around 10, 9, 8% since 2008 or so. All right, regardless, though, you don't see any year that doesn't have a line exist. So we're always going to have unemployment, which means we're always going to collect SUTA and FUTA taxes. Because as people get unemployed, they need money to help pay for their costs of living. So SUTA and FUTA are always going to exist. However, one thing that might happen is they might get lowered and raised depending on the state of the economy that we're in. And the other thing, again, that we kind of already talked about was unemployment by industry. Depending on the industry that you work in, the business that you own is going to pay different amounts of SUTA taxes depending on how many workers they lay off. So again, the highest number in this chart here is construction, but typically construction workers lay off the most amount of workers. Therefore, it just makes most sense that since their workers rely on unemployment more than other industries, then they should pay more. Makes sense. If you take a look down at the lower numbers here, government or education, which is 5.6, they're going to pay less into SUTA because they typically don't lay off workers. So those businesses shouldn't get penalized to pay more in taxes. That's where those figures come from. All right, I'm done rambling. The rest of the time is yours. Good luck.